Welcome to the TrustedBridge Capital Market Observations Call. Today is Friday, November the 3rd. I'm your host, Eric Jefferson, managing partner with TrustedBridge. Before we get started, have a few quick words from our legal team. With that, we can go ahead and begin. I want to start by just recapping some of the recent performance in the stock market. We've seen a very difficult month of October. S&P was down over 10% from its July highs. However, to start the month of November, now 3 days in, we've recouped almost half of those. The S&P now targeting a retracement to 4,400. The catalyst for some of those gains goes back to Wednesday. We heard from Jerome Powell, who now for the second Fed meeting in a row kept rates unchanged, in essence, kept them where they were. Granted, did stop short of taking any future rate hikes off of the table, but at least for now, it does appear that the Fed is done. That was welcomed by both stocks and bonds, particularly longer dated treasuries, something we very recently added to the portfolio that had rallied very nicely. Now, as we take a step back, think overall macro conditions, economy still remains very resilient. Granted, hasn't necessarily shown the effects of the recent rate hike that we went through. Home prices, for example, tend to be inversely correlated with interest rates. Haven't really seen home prices come down materially. A lot of that is a function of very few people are moving, knowing that they're then going to have to pay 8% for a new mortgage. When we think about the consumer still remains very resilient as well, going out spending. Granted, we are starting to see some cracks there, signs of a slowdown. Things like credit card usage is up, as are credit card defaults. That suggests a lot of the extra cash that was stockpiled during the pandemic has likely been drawn down. That will certainly pose some challenges for consumers as we still continue to battle inflation. We think about the labor market as well, remains healthy. Some signs may be slowing down, but when we look at the macro labor conditions with both birth rates and immigration down, those dynamics remain very much in favor of workers. We've seen that sort of play out with a number of union strikes as of late that have been resolved with some very healthy raises for those workers. Now, all of this, of course, takes place amidst a fairly unstable political backdrop. Domestically, we have what likely will be a government shutdown coming in 2 weeks. Again, there's going to be some hard decisions agreed there around government spending. I think you're also going to see less willingness for the two parties to come together, particularly knowing that the GOP's previous leader, Kevin McCarthy, was ousted for his role based on agreements that he made. Think that could translate, to some choppy environments, something obviously to monitor very closely. And then on top of this, currently, two of our allies engaged in military conflicts across the world. And when we think about capital markets, though, earnings season, a majority of the way through, results better than expected. We've seen vast majority of companies, interestingly enough, beat their earnings estimates. With the importance there, we talk about earnings long-term drive stock prices. Interestingly enough, one of the other metrics often shared there is revenue. That's a function of the top line growth. Those numbers came in a little softer than expected. I think that does speak to where we are, potentially a little further in the business cycle. One interesting theme as well, companies that do beat earnings haven't necessarily been rewarded to the extent that they have previously. Conversely, those companies that miss have been absolutely punished. That's something that we think trend may continue, and therefore why we continue to emphasize owning higher quality companies, those with strong balance sheets, with stable cash flow, that are going to be able to continue to operate and profit in what could be a slowing macro environment, but also one defined with higher rates that are likely here to stay, again, albeit not as much a concern of moving higher. And separate news, Sam Bankman-Fried was found guilty of siphoning billions of dollars in consumer money from his crypto company FTX. Was found guilty yesterday, currently looking at over 100 years in prison. That sentencing will take place in the months ahead. And on a very positive note, For the Beatles fans out there, the Beatles organization released their final new song called Now and Then. This was originally written by John Lennon back in 1977. It was left on an unreleased demo tape that a production team used AI to isolate Lennon's voice. As well, we saw Paul McCartney and Ringo Starr turn it into a fully realized track. That's all for today. As always, happy to discuss anything shared. And if we don't connect, have a great weekend. Take care.